Welcome back. Even as the weakness of the market continues, let's talk about a couple of stocks that are in focus, reported their numbers. One of them is Nitin Spinners. We have the MD of the company, Dinesh Nolkar, joining in, where the sales rose about 20% sequentially. We have some improvement in the margins year on year as well. The company speaks about optimized capacity utilization, increased value addition, and diversified product portfolio as key triggers for the improvement. Thanks a lot, Mr. Nolkar, for joining in. If you could give us a sense of, the kind of growth that you are foreseeing in FY25, especially on the volumes, value-added products, and as a result of which the margins that you're targeting.
Good morning, and thank you for having me on the show. As far as volumes are concerned, we have implemented the capacity expansion during the last year. So the full result of that will be affected in this year. So last year, we are expecting overall an increase of about 10 to 12% volume expansion in comparison to last year for our products. As far as value addition is concerned, we are continuously focusing on value-added yarns, as well as also on the value-added fabrics, which is adding value to our base portfolio of yarns. So that particular portfolio is slowly increasing, and we are expecting this to grow further. And as far as margins are concerned, I think they are more of a they are related with the demand perspective. We have cotton prices and the raw material prices are near to its bottom levels. And from here, the demand optimization can only increase the margins going forward.
Okay, all right. Good to hear that then, Mr. Nolkar. So you believe that margins have bottomed out and they'll improve from here on, if I got that correct?
Yeah, basically, margins during the last financial year itself had bottomed out. We had a lot of issues in the export markets in the last because of the Russia-Ukraine and the Israel-Hamas conflict. Now, I think the export market is looking up, and going forward, the margins should improve.
Okay, so you want to give us a band with regard to what margins we should work with, and since the export market has improved, what will it contribute as a percentage of your total revenues?
As of now, it is about 57-58% of our exports, of our total revenues, export percentages. Now, this has been in the range of 55 to 60%. As a conscious decision, we used to be exporting about 65% plus, but now we have, as a conscious decision, we have taken that we should keep it around this level itself.
All right, so 55 to 60% is what the export contribution would be. Margins, you've done what, 14.5% in the fourth quarter. The full year was closer to around 13%. How much more can we see in terms of an improvement?
With operations like the product mix and the operations like our company, we should be always in the margin. Normal margin is in the range of about 16 to 20%. So still we have a headway to go up in the margin side. But that completely depends on the demand side, which is still to come up to its full scale in the downstream sectors.
So 16 plus percent, 16 to 20 is the broader range. You spoke about value added. You said you're increasing your focus out there. Could you give us a sense of the mix that you are targeting from value added? How much does it contribute right now? How much is this likely to do going forward?
The value added portion, including fabrics, is about 38 to 40% in that range. And going forward, we are targeting this to go up to 50%. We are trying to see that we reduce our dependence on the commodity yarn products lesser and lesser. So in next 1.5 years time, we expect that we should be in around 50% levels.
Okay, all right. Could you tell us what is the current utilization levels? And you were adding some capacities as well. So at peak levels, at current prices, what is your revenue potential?
Basically, last year, our capacity expansion got implemented by the middle of the year. So we had done a quantity of about 91,000 tons of yarn during last year. Our base capacity is about 108,000 tons. So we can do up to, on a normalized utilization level, we should be doing about 104,000 to 105,000 tons of yarn. So we have still 10 to 12% headway there. As far as at the current price levels, the top line should be around 10% up from here, in the range of 3,200 plus kind of range. We have done 2,900 crores last year.
So peak revenue potential for you with your current gross block is around 3,200, sir?
About 3,300 is the full utilization level.
You're targeting 10 to 12% volume growth in FY24. If the prices stay the same, you should be reaching your peak revenue in FY25 itself, right? So what's the growth plan beyond that? Is there any capex on the cards?
We are still it is on the drawing boards. We are working out what are the areas where we can grow, where the demand is there, and what are the international geographies where we can grow in. So that is still on the drawing board. We have been consistently growing for past 15, 20 years with a CAGR of 18, 19%. So we expect to maintain that kind of momentum. So we'll come up with our exact plans going forward.
So we'll have to hear about that then in the next 2 quarters or so. I think in the first half of the year, you'll have to, move from the drawing board to the announcement, because you'll take some time to start that capacity. Otherwise, you'll be at optimal levels and there'll be no growth. Is that correct? Should be expected in the first 2 quarters of this fiscal?
Sure, you should be expecting it in the first half of this year.
All right, we'll hold you on to that. Mr. Nolkar, I also wanted your thoughts on the woven fabric business. Since launch, it's done almost 600 crore of your 600 crore of revenue. That's a fair chunk, nearly 25% of your revenue, current revenue since it's launched. How much higher can that be?
There is a lot of potential over there. We see that in this business, we have grown pretty fast. We started this business in the calendar year 2020, and nearly when the COVID hit us. And still we have been able to grow this business in a very proper manner and with reasonable margins. So going forward, there is a lot of scope to grow this business. We have a lot of potentials in this business particularly. So we should be expecting our capex also diverted towards that. At the peak level, the revenue, we have reached near to the peak level revenues in this business segment as well at this point of time.
All right, Mr. Nolkar, could you quantify the cotton inventory that you're sitting on? And for how many months will it be adequate for you?
Normally, we do not share this, but you can make it out from the balance sheet and the other data which is available. So we are sitting on a very reasonable inventory. We do not have excess inventory.
So normally you sit on inventory for how long?
Normally it is about 2 to 3 months time.
And currently as well, it will be on those lines then? Or is there any big deviation?
No, not much deviation.
How have prices of cotton panned out? I mean, I remember the last price was close to around 62,000 rupees per candy. Where does it stand now?
It is at about 57,000 rupees a candy. So in the last 7 to 8 months, from October onwards, the cotton prices have remained in the band of 58,000 rupees a candy, plus minus 3,000. So it's a very fair band which has been there. So it's plus minus 5% only. So it has been quite stable, I would say, in comparison to the previous 2 to 3 years.
Got it, Mr. Nolkar. We appreciate you joining in, wishing you all the best and giving us those replies. We look forward to chatting up with you during the year, and we'll wait for your announcement with regard to the expansion as well. Well, when we were having that chat with Nitin Spinners, just take a look at the market. We've seen a big recovery from the day's low, and the big boy, HDFC Bank, has gloved up. It's come out and it's batting for the bulls. Big recovery is what we're seeing in HDFC Bank. Explains why we have seen a recovery in the markets as well of around 50 points from the low point of the day. Slip in a short break, come back, continue to focus on markets. Don't go anywhere.